Hidden costs are draining homeowners' wallets every single day, but they don't have to drain yours. In this video, I'm going to show you how to protect your investment, avoid costly mistakes, and thrive as a homeowner. And let's start with one of the biggest surprises homeowners face, which is rising property taxes. Over the past few years, property taxes have skyrocketed, with the average homeowner paying 25% more between 2019 and 2023. So in states like New Jersey and Connecticut and New York, taxes are among the highest in the nation, adding thousands of dollars to annual housing costs. These increases are tied to the rising value of homes, a sign of a strong market, which is good, but also a growing financial burden. So local governments, they reassess properties regularly to fund schools, roads, and public services, which means even more frequent hikes. Are you overpaying on your taxes? You might be, and here's how you can fight back and win. This is something most homeowners do not realize, that you can challenge your property tax assessment. So if you believe your home's value has been overestimated, you have the right to appeal. The process involves gathering data on comparable homes in your area and presenting your case to the local tax assessor. And it might sound intimidating, but it's a pretty straightforward process that could save you hundreds or even thousands of dollars every single year. And as a realtor and a homeowner, I've guided many people through this process and seen them actually be successful. So preparation is your best defense against rising property taxes. When you're buying a home, make sure you research local tax rates and trends to understand what to expect in the future. And look, you can't guess it every single time, but you want to look for areas with stable tax environments, which can make a significant difference in long-term affordability. And once you're a homeowner, you have to stay informed about upcoming reassessments so you're never caught off guard. A little knowledge and proactive planning go a long way in keeping your tax bill under control. So rising property taxes may feel inevitable, but they're not something that you have to accept without a question. By staying informed and taking action, you can protect your budget and your peace of mind. And speaking of rising costs, let's explore another major expense homeowners face, which is insurance premiums. Homeowners insurance is one of those expenses that often flies under the radar until it doesn't. So between 2021 and 2023, premiums rose by an average of 20% nationwide, and they're expected to climb another 6% by the end of this year. So natural disasters like hurricanes, the wildfires, and floods are driving these increases as insurance companies adjust for higher claims costs. Some major insurers have even stopped offering coverage in high-risk areas such as California, and you saw what just happened in LA, and it's leaving homeowners scrambling to find affordable policies. For many, these rising costs have become a serious financial strain. So are your homeowners insurance costs rising? Most people miss this simple step that can save them hundreds, again, or even thousands of dollars. And it might sound daunting, but don't worry. There are steps you can take to manage your premiums. The first is to shop around. So many homeowners stick with the same insurance provider for years, not realizing that the rates and policies can vary widely between companies. By comparing quotes from at least 3 different providers, you could save hundreds of dollars a year without sacrificing coverage, which is very important. It's a simple but powerful way to take control of your costs. Upgrading your home can also make a big difference. Features like storm shutters, updated plumbing, and home security systems often lower your home's risk profile, which can lead to lower premiums. Some insurers even discount for proactive measures like installing fire alarms or reinforcing your roof. These upgrades not only save you money on your insurance, but also protect your home from potential damage, giving you peace of mind. And finally, it's important to understand your rights as a homeowner. Some states have laws that limit how much insurers can increase premiums in a given year. So knowing these laws can help you advocate for yourself if you believe your rates are rising unfairly. Insurance is one piece of the larger puzzle of homeownership costs, but with the right approach, it's a piece you can manage effectively. And this leads into the affordability crisis. Homeownership is becoming increasingly unaffordable for many Americans, even those that already own a home, they understand how unaffordable it actually is. Rising home prices combined with stagnant income growth have created a situation where more than 25% of homeowners with mortgages are spending over 30% of their income on housing, which is wild. This leaves little room for expenses, savings, and emergencies. And it's no surprise that 82% of recent home buyers that are homeowners now report some level of regret, with nearly half taking on additional debt to maintain their standard of living. These statistics paint a sobering picture of the challenges facing homeowners today. Are you feeling financially stressed as a homeowner? Here is how to avoid the number one mistake that traps so many people. The key to avoiding these challenges is to plan for the full cost of home ownership. No, not just the purchase price. So many people focus solely on their mortgage payment without considering the other expenses like taxes we already talked about, like insurance and utilities and maintenance, which we're going to get into next. This approach can leave you financially overextended and struggling to keep up. Instead, create a realistic budget that accounts for all of these costs with room to spare for unexpected increases or emergencies. For those that are already feeling the strain, there are resources available to help. State tax relief programs, mortgage modifications, and refinancing options can provide financial relief if you're struggling to make ends meet. It's also worth reaching out to your mortgage servicer to explore repayment plans or adjustments that fit your current financial situations. The sooner you address financial strain, the easier it is to get your life back on track, and I know that's what you want. You know, as a realtor, this is something that I help my clients understand, and it's the full picture of home ownership costs before they actually buy. It's not just about finding the perfect home, it's about finding the perfect house for your budget and your lifestyle. So you have to be proactive. You have to take that proactive approach to affordability so you can enjoy the benefits of homeownership without the financial stress. Now let's move on to another hidden cost that surprises many homeowners, which is maintenance. Maintenance is the most overlooked cost of homeownership, hands down, yet it's one of the most important. On average, homeowners spend somewhere between 1% or 4% of their home's value on upkeeping it. So for example, a $300,000 home, that's $3,000 to $12,000 each year. And that's just for routine maintenance. Unexpected repairs like a broken HVAC system or a leaky roof can add thousands more to your expenses. These costs aren't just financial, they're emotional, catching many homeowners off guard and causing unnecessary stress. So do you think home maintenance is actually optional? Neglect it and you could pay double or triple in repair costs later. The best way to handle home maintenance is to plan for it, like everything. Start by setting aside at least 1% of your home's value each year in dedicated home maintenance fund. This cushion allows you to address issues that arise without disrupting your overall budget. Budgeting is everything, right? I talk about that a lot. By checking your systems and making sure you schedule routine maintenance, you're going to catch small problems before they become expensive disaster. So all that preventative maintenance may seem like an extra chore, but it's one of the most smartest investments that you can make as a homeowner. Another key to staying ahead of maintenance costs is to have a trusted network of professionals. And I tell this to people all the time. You have to find reliable contractors, plumbers, electrician, handymen, because you're going to need them eventually, and this is going to save you time and money when the issue does arise. I always recommend getting recommendations from neighbors or local Facebook groups and vet the service providers for experience and fair pricing. Well-maintained homes not only save you money, but also boost your property's value when it does come time to sell. Buyers notice the difference between a home that's been cared for and for one that hasn't, and they're willing to pay more for peace of mind. I can guarantee that. Maintenance isn't just about fixing what is broken, it's about protecting your investment and ensuring your home continues to serve you for years to come. If you own a home in an HOA, homeowners association, you will have monthly fees and additional costs. HOA fees typically range from $200 to $400 per month, depending on the amenities. It could be less, it could be more. But while these fees often cover like landscaping, security, and community facilities like pools, they can often increase over time. And worse, many HOAs impose special assessments, which I'm going through right now with a property that I own in an HOA. And there are one-time charges and there are unexpected expenses like road repairs and building upgrades, and they're a pain in the butt. These assessments can run into the thousands, leaving homeowners scrambling to cover the cost. Do you think HOA fees are unpredictable? One surprise assessment could drain your savings, so here's how to avoid it. Before buying a home in an HOA community, it is critical you do your homework. Start by reviewing the HOA financial documents, including their reserve fund. And this is really important because a well-funded reserve indicates that the HOA is prepared for future expenses, reducing the likelihood of a surprise assessment. And you'll also want to read the rules and regulations carefully, as they can affect everything from what you're allowed to plant in your yard to whether you can rent out your property. Understanding these rules upfront can save you headaches later. If you're already in an HOA community, staying informed is key. So make sure you attend the meetings whenever you can, as this is where the financial decisions are often being made. And by staying involved, you'll have a way better sense of whether the fees are likely to increase or if special assessments are on the horizon. So you have to communicate, you have to stay in communication with the HOA board because these things come up all of the time. While the HOA fees can feel like an extra burden, they often provide value by enhancing the community and protecting your property values. And I know that's important to you. So well-maintained areas, security, well-maintained amenities, they're going to make the neighborhood more desirable, benefiting you in the long run. Now, this next part is without a doubt the biggest issue and one of the most costly, and that is being house rich and cash poor. One of the most common financial homeowner traps is being house rich and cash poor. And this happens when most of your wealth is tied up in your home's value, leaving little liquid cash for emergencies or other expenses. It's a situation that sounds good on paper, right? You've built equity in your home, but in reality, it can leave you feeling financially stuck. For example, while the average single-family homeowner builds about $225,000 in equity over 10 years, that money is often inaccessible unless you sell or refi. So have you built up a lot of equity in your home? That's great, but it's not accessible unless you do the following. To avoid this dilemma, it's crucial to maintain a balance between building equity and keeping cash on hand. So start by creating an emergency fund specifically for your home. And this fund is going to cover at least 3 to 6 months of expenses, including mortgage, utilities, and maintenance. Also wise to save for big ticket items like the roof and like replacing or repairing an HVAC system, which is the big ticket items. They cost thousands of dollars. But if you do need to access your home's equity, options like refinancing or a home equity line of credit, the HELOC, can provide cash flow. And these are amazing tools. However, these tools come with risk, such as higher interest rates and additional fees. That's why it's important to work with the financial expert. Do yourself a favor. It's going to help you significantly. They're going to help guide you and determine what's the best approach for you. And sometimes the best decision is to leave your equity untouched, preserving your financial stability for the future. The key takeaway is this: your home is a valuable asset, but it shouldn't be your only financial resource. By keeping a portion of your wealth liquid, you'll have the flexibility to handle life surprises while continuing to build equity over time. So homeownership is more than just wealth on paper. It's about having financial freedom to enjoy the life that you've worked so hard to create. And remember, owning a home isn't just about where you live, it's about how you live. If you need help, if you're in that selling process and you want me to connect you with a realtor anywhere in the US or Canada, just click that link below and schedule an appointment with me. Talk to you soon.